Hey guys, Austin and Jonathan here
What's up?
with your next weekly whiteboard.
Hope you've been enjoying these whiteboards. We've had fun making them and
Lots of fun.
hope they're educational. Share them, like them, comment. So today, our weekly whiteboard, we're going to be talking about private mortgage insurance, or as you know, PMI. And PMI could be a great thing, right, Austin?
Yeah, it's a great tool. People wig out about it sometimes, like, I don't want to pay PMI. But PMI is not a bad word. It's not a four-letter word. It's not a bad thing. It's a tool that's available to you, if you qualify for it, that allows you to do less than 20% down on a conventional loan. Otherwise, you got to put that 20% down. So a lot of people hear, what's the minimum down payment I got to do? Do I have to do 20% down? You can do 20% down,
Yep.
but PMI lets you do less. And there's a lot of different scenarios where that might make sense. Maybe you don't have the funds saved up. Maybe you want to use the funds somewhere else. PMI helps you get into that house with a lot less down.
So today, we want to show people how to make best use of PMI.
That's right. But one of the things that a lot of our referral partners and clients assume is that the only way to pay PMI is monthly, but that's not true.
No, so there are three types of PMI. And so the first one is monthly, and that is an option, very common, like Austin said. But there's also two other kinds that a lot of people don't consider or even know about. That's upfront and split. And upfront is where you pay all the mortgage insurance at title, at closing, right when you purchase your house. It's just a one-time payment. And so your mortgage payment, the entire time of that loan, you have no PMI payments on it. And then split is just using a combo of upfront and monthly. And that makes sense in rare cases. But Austin, we have a really cool situation where we want to share where upfront can be really powerful.
Yeah, we always talk about how math is math, and we want to demystify the mortgage process and take a lot of the emotion out of it, because for us it's just about numbers. What makes sense for you? A lot of times it's going to come down to this: how long do you think you're going to be in this house? So here's the scenario, and in this scenario you would be paying if this is you, you'd be paying $167 a month PMI. That ain't cheap.
That's a good chunk. And so, so you're going to get a mortgage and buy a house and have $167 monthly PMI. It makes me think, Austin, how long do I have to pay that?
You got to pay it until you get to 22. Technically, until you get to 20% equity, but it's not going to automatically cancel until you get to 22% equity. That tacks on like an extra year. So be cognizant of that. If you're paying monthly and you get to 80%, it's not going to auto cancel. You got to request for it to cancel. Otherwise, it'll cancel at 22. So
that's still a long time. That could add up, right?
Yeah. In this scenario, you're talking, you ain't paying this thing off until you're about 8.5 years in. And at this rate, it's going to cost you over $17K.
Wow.
In PMI. Yeah.
So all those monthly payments until you get to that 22% equity position, you're going to end up paying $17,000 of private mortgage insurance payments.
That's a lot. That's probably more than what you're paying on your down payment. But if you pay this thing up front, the upfront costs you $65.74. That sounds like a lot, but versus $167 a month savings, guess where you break even? Just after 3 years.
Wow.
So if you're going to be in this house more than 3 years, really kind of 4 years and beyond, then doing the upfront makes sense if you can afford to do it. It's a great way to use your funds to save monthly and save big over the life of the loan.
That's exactly right. So that's what Austin and I want to do when PMI comes up in a discussion with our real estate partners or with our clients. It's like, hey, PMI is part of this equation, but what's the best way to use it?
Yep.
And in this case, if our clients are saying, hey, I'm going to be here 5, 6, maybe 7 years, we'd be strong advocates like, hey, let's do it up front.
And the beautiful thing is, in certain situations, you can even negotiate for the seller to cover for your upfront. And so it keeps you from paying it, and it keeps you from paying this.
You heard that right. You can have someone else pay your PMI.
Yep, if you negotiate well. If you're curious about how to do that, give us a call. We'll walk you through it.
That's
beautiful.
Right. That's what we're here for, guys. So anyway, that's PMI in a nutshell, and just want to drop this quick video. And like it, share it, comment it, and Austin and I are always here for any question you guys have. Peace out.
Woo! Adios.
All right, here we go.
Could put my sport coat on. I guess I should take these off. Ready?
Ready, Freddie.
Let's go, baby.